Hey, congratulations on buying a home. That's a big step. A home is one of the most important investments that you will ever make in your lifetime. As you begin to settle into your new home, you realize that you are in more debt than you've ever been in before. But that's not a bad thing at all. Experts say that mortgage debt is among the best kind of debt to have. But at the end of the day, it's still debt. But as long as you make your mortgage payments on time, you should be good to go. However, life comes with unexpected challenges that could hamper or altogether eliminate your ability to make those mortgage payments, leading to financial stress, foreclosure, or even bankruptcy. It's a good idea to educate yourself about what options you have to protect yourself from these unforeseen circumstances. Let's take for example Malcolm and Kristen and George and Alicia. They are both newly married couples who have just purchased their dream home. Both couples buy a $250,000 home on a 30-year fixed-rate mortgage. Their payments are set at $1,500 per month. Malcolm and Kristen decide to protect their home with what is known as a mortgage protection plan. They get a 30-year plan in place to cover their 30-year mortgage at $250,000 of protection. George and Alicia, on the other hand, decide to spend that money on endless shopping sprees and weekend getaways. One day while out with his friends, George has a little too much to drink and decides to drive home. He gets into a car accident and sadly passes away. This is doubly sad because the money George and Alicia were spending on trips and stuff could have been funding their mortgage protection plan that they never got. So now Alicia is stuck trying to make mortgage payments on her own, which she can't do now that the family income has been cut in half. She slips into foreclosure and loses the home, all because she and George had to have their expensive getaways and shopping sprees. Now, had they gotten the mortgage protection plan that Malcolm and Kristen had, Alicia would have received a tax-free check for $250,000. The home would be paid off in full, with money left to spare. And if for some reason Malcolm or Kristen have any serious health issues like a heart attack, stroke, their mortgage protection plan can be tapped into while still living, giving them much-needed funds to help with their mortgage or any other bills while sick and out of work. Makes a lot of sense. Moral of this story: don't put having a good time in the short term over protecting your family in the long term. If you have a mortgage and you're making monthly payments, be smart and protect your home with a mortgage protection plan. You will rest easy, knowing that your most important investment is protected.